The Deposit Insurance and Credit Guarantee Corporation Bill 2021 has been cleared by the Cabinet today. As you are aware, the Deposit Insurance Credit Guarantee Corporation insures all bank deposits, such as savings or fixed or current deposit or recurring deposits. All of them are insured. And it covers all commercial banks. So whether they are private or public sector banks, they are all normally covered. And even foreign bank branches are covered, that which is in India. Local area banks, regional rural banks, cooperative banks, small finance banks, all of them are payment banks, or normally all of them are insured. Now, each depositor's deposit in a bank are insured up to maximum of 5 lakh in each bank for both principal and interest. So I just want to give you the background of what it means. Now, what is the international coverage and what is Indian coverage? Just for a picture. Now, in India, with the increase of insurance amount from 1 lakh rupee to 5 lakh rupees, is going to cover 98.3% of all deposit accounts. Because of this 5 lakh increase, 98.3% of all deposit accounts will get covered. And in terms of deposit value, 50.9% deposits value will be covered. Now, if this is what we have in India now after this cabinet clearance, just compare what prevails outside globally. Deposit insurance coverage is only 80% of all deposit accounts globally. And it covers only to 20 to 30% deposit value. So what we have done today in India because of cabinet approval means that 98.3% as opposed to 80% globally. In India it's 98.3%. And as regards account value, we will be covering 50.9% value, while globally it is only 20 to 30% value. Now, accessing depositors' money has been an issue of also when will it be given, what conditionality prevails. Normally, at least proven history says 8 to 10 years it takes. Only after the complete liquidation do they get their money of insurance. But now what we are saying is, even if there is a moratorium on a bank, which means everything is frozen, depositors are not able to take their money out of their accounts, even at that time, this measure will set in. Anuragji referred to it by saying 90 days ke andar. What it actually means is first 45 days will go for the bank which is now in distress to collect all the accounts where the claims will have to be made, and then it will be given to this insurance company, which in real time will check it all up, and nearer the 90th day you will get the money, or in and around the 90th day you will get the money. At least by 90th day, 90th, 91st, 95th, whatever. Within 90 days the process will be definitely completed, and not waiting for the eventual liquidation or not even waiting for the eventual resolution. Suppose somebody else comes and takes the bank and the bank is revived again also. But if that process takes, let's say 3 years, 4 years, we are not waiting for that. This will give relief 90 days and immediately after that. The process itself is 45 plus 45 days. Let's understand that. And then this clearance now, therefore, is going to give relief for all those institutions which have already come under moratorium. It's not going retrospectively completely back. But if your bank has already been declared under moratorium, you will also be covered by it. So in the future, this will be the practice, and now for those banks which are already declared under moratorium, also this will cover. Now, deposit insurance premium is normally paid by the banks themselves. The bank which has its deposits, its customers, they are the ones who pay the bank. It's not charged of customers. Here, every bank actually used to have 10 paisa premium given for 100 rupees of deposit. This is now being raised to 12 paisa. We are saying it should not be more than 15 paisa at any point in time per 100 rupees. So that is being made explicit, and we are also making sure that we will have an enabling provision in case banks feel that this has to go up, for them to go up, but within a certain prescribed limit which will be determined by the government in consultation with the RBI. So this is largely what this cabinet approval means. These are the major substantive amendments that we're talking about. Minor definitional changes are also coming through here, but largely this will be the biggest relief we can offer to those small depositors, and going by the figures that we have, will be nearly covering 98.3% of all deposit holders. So this is what the cabinet under the Prime Minister's leadership has given approval for, and this is something which we'll certainly be taking to the Parliament even in this session. The second issue, which relates to the Corporate Affairs Ministry, is the Limited Liability Partnership Amendment Bill. Interestingly, one thing which really stood out for me was this act was passed in 2008, became effective in 2009, and from 2009, with about 81 sections in it, from 2009 till today, there was never a reason for touching or bringing in any amendment whatsoever. For the first time, for the Limited Liability Partnership Bill, an amendment is being proposed this time. And what is the necessity for us to bring in the amendment? I'll briefly touch upon the fact that there was a committee which was formed, Company Law Committee, which was formed in 2013. They had actually looked at the Companies Act only and given a lot of recommendation, but gradually they also were made to they were required to also look into LLPs, limited liability partnerships. Now, why is this limited liability partnership amendment required now? Because we are doing a lot of change in the Companies Act, and those corporate bodies under the Companies Act are getting a lot of ease of doing business. Most of the sections which had criminality in its approach, criminality being the spirit with which some of the sections were written, are now getting decriminalized for Companies Act. But for the LLP, a similar treatment had to be given, because now LLPs are becoming more popular among startups. Many small companies which are being formed by 2 or 3 partners are also facing situation where many of the sections relate to criminal offences. I'll just give you a picture of what it is. As of today, you have 24 penal provisions in the Act, 21 compoundable offences, and about 3 non-compoundable offence, and there was no default under which is dealt under an IAM. Now, after the amendment bill which the Cabinet has cleared today, and that which will definitely go to the Parliament, the total number of penal provisions in the Act will be reduced to 22. Number of compoundable offences will be only 7. Number of non-compoundable offences will be only 3. And number of defaults to be dealt under IAMs will be only 12. And number of penal provisions which will get omitted will be, one of them will get completely omitted. And therefore, alternative framework will also be dealing with one of them. So a total of 12 offences are to be decriminalized for LLPs. And then 3 sections are totally to be omitted, of which one is, of course, getting decriminalized also. Therefore, this set of amendments are, one, bringing for the LLPs an equal play field compared with the corporates, large corporates which come under the Companies Act. So somewhere between the large companies which are very well regulated and partnerships or small proprietorship, LLPs in between did not have the benefit of many of the things which were happening either under simplified regulation or under the ease of practice, whether it is under the proprietorship. So we are bridging this gap and making LLPs far more attractive and easy to handle, so that many of the startups today which prefer the LLP model can also feel equally given ease of business opportunities. So this has also been today cleared, and I'm very happy to say that this is after the committee, the Company Law Committee's recommendations, but even then there was a public domain this whole document was put in the public domain, opinions were elicited from anyone who chose to give it. So that level of consultation is also over and done with. We had collected the views, and even those views have been looked into and taken into consideration. So one of the things which is new, which I would just like to flag off, is we are coming up with a new definition of small LLPs. If you can have small companies, why not small LLPs? So prevailing at the moment is 25 lakh or 40 lakhs is the kind of numbers that we talk about when we are talking about turnover size, and also LLPs with contribution less than or equal to 25 lakhs, the partner's contribution, and turnover less than 40 lakhs are treated as small LLPs. Now what we are saying is 25 lakh will go over to 5 crores, and 40 lakh, the turnover size, will now be treated as 50 crores. So even 5 crore contribution and 40 crores and 50 crores turnover will be treated as small LLPs, which means we are expanding the scope of what can be a small LLP, and therefore the businesses which need a larger turnover, larger contribution of the proprietors will also get the benefit of being small in its definition. So even that a newer element is being brought into the LLP, and this is the amendment which has been cleared into the LLP Partnership Act, the Limited Liability Partnership Act, being amended for the first time, an act which was commencing in its operation, although passed in 2008, from 2009. And the last one, which is an MOU, is of very big significance, and that is, you are aware that IFSC, the International Financial Services Centers Authority, which is in Gandhinagar, GIFT City, they have now signed a multilateral memorandum of understanding with the International Organization of Securities Commissions and the International Association of Insurance Supervisors. This is one of the biggest multilateral forum which has several regulators coming into it. It has 124 signatories. India joining this will enable all kinds of exchange of information and ease of doing business for those who are registering themselves in the GIFT City. And in GIFT City, there's single window for all regulators. Similarly, in many of these agencies, these international benchmark setting agencies, cross-border cooperation is one of the biggest aspects. So we'll be gaining from that. So that was the MOU signed.